Well, hello, forensic accountants. This is our guidance for cases 11 and 12. I like the case, and it fits in with corporate strategy. We get given an opening situation over here, and number one talks about the contribution margin ratio and the break-even point. So, contribution margin ratio is the selling price minus the variable expenses per unit. And we're given that in the opening paragraph at 22.50. And so if I want to get the contribution margin, it is selling price minus variable costs. Contribution margin, $15. Oh, we wanted the contribution margin ratio. So contribution margin ratio, I would divide this by the selling price, and we would go equal contribution margin divided by the selling price. And I would get that, and I would format this as a percentage, actually. So we can see what the answer should be, but we will go percentage over there. Contribution margin ratio, 40%. The break-even point. Break-even point would be our fixed expenses divided by contribution margin per unit. So we'll go back here, and it is contribution margin per unit. Fixed expenses given from the top, 480,000. Contribution margin per unit given as calculated as 15. And so when I do the division here, divided, I get 32,000. We can format the cells, give it a nice 1,000 separator. Don't need any decimals. And so my break-even point is 32,000 units. That's a bit better. Degree of operating leverage. I actually need to go that is calculated by doing contribution margin divided by net income, and they want the operating leverage given in the blurb. So we'll contribution margin 600, net income, operating income, and when I do the division here, we can see it's going to equal 5. There we go. Operating leverage equals 5. Now, what on earth does this mean? This would actually mean that if our sales increase by 10%, our net operating income is going to increase by 10 times 5, 50%. So it gives me the increase in my operating income from a given percentage change in sales. Again, if our sales go up by 5%, net income is going to go up by 5 times 5, 25%. You can go and just have a look over here. We have accountingtools.com. You can do a little Google search. That website, operating leverage, and you should get the full answer over there, and that will indeed explain it. So, at least that answers the question. Now, number 2, an increase in labor rates. Variable costs are going to increase. What will be the new CM ratio and the new break-even point? So I'm actually going to take this down here, and actually I could almost copy. We'll do a copy over here. I'm going to do this. We'll do a paste over there, and we are going to have to do a few changes, but this is number 2. We'll just do this, 2 dot. Okay, what's going to be happening here? Let me just think for a while. Selling price will stay the same. My variable expenses no longer $22.50, but extra $3 higher, $25.50. New contribution margin, 12. new contribution margin percentage, 32%, and in fact that'll be the contribution margin ratio, 32%. New break-even point, fixed expenses stay the same, but the contribution margin per unit is no longer 15, but it is the old 15, and it's going to be $3 lower because the variable expenses went up by $3. So contribution margin 12, contribution margin 12, break-even point now, 40,000 skateboards. Number 3, if the expected change takes place, this is not good news, variable costs going up. How many skateboards will have to earn the same, will have to be sold to earn the same operating income? So we go here, this is number 3. So I'm going to use my old favorite formula, unit sales, and this is actually going to be fixed costs plus target profit. And if I divide this by my contribution margin per unit, it'll tell me how many units I have to sell to get the same net income. So fixed costs, 480,000, but I don't just want to make nothing, I actually want to make a profit here of 120,000. Contribution margin is 12, and when I do this division, it is going to turn out to be, I can see what it's going to be. It's going to be 50, I'll do it. It's going to be 50,000 units. So my costs went up. I need to sell many more units to earn the same. We can actually format all this over here. Format cells, number, no decimals, 50,000 units. I now need to sell 50,000 units next year to earn the same operating income as before. Number 4 says, refer again to the data. If we want to maintain the same contribution margin ratio, what selling price per skateboard must it charge to cover the increased labor costs? So we have to go back over here. If my variable expenses go up, what selling price must I charge to earn the same contribution margin ratio, which is 40% or 0.4. So now we have to do a little gymnastics over here. I'm going to give the old situation if I can. Let's see if we can. The old situation was something like this. Over here. This is number 4. There we go. This was the old situation. My selling price minus my variable costs, 22.5, gave me an answer which was equal to 0.4 times the selling price. So I go back over here. My selling price minus my variable costs are going to give me an answer of $15, and this $15 is 0.4 of $37.50. There it is. Now, this is the new situation. My selling price minus not $22.50 but $25.50 must now again equal 0.4 times my selling price. And in fact, I want to solve for selling price. So I'm going to move things around a little bit here. Selling price minus 0.4 times selling price equals 25.5. So what I did, I pulled that over there, and I pulled that over there, and I changed the sign. Selling price minus 0.4 selling price is 0.6 times whatever this magical selling price is. 0.6 selling price equals, no change on the right, 25.50. This means that selling price equals 25.5 divided by 0.6. Just getting rid of that 0.6 over there. And that means that selling price must equal we can do it here. Must equal 25.5 divided by 0.6. Selling price 42.50. So if I go back to the beginning, and I'm just going to copy this. Actually, we can copy all of this here. We'll do copy. And I'm just going to do a little check over here. There we go. Selling price 42.5 minus variable costs no longer 22.5 but 25.5. New contribution margin 17, which is indeed 40% or 0.4. So number 4, a little algebra, but we should be good. Number 5, original data. New contribution margin ratio, new break-even point. So let's go up here. I'm going to do this, and I'm going to do a paste, and we are going to answer number 5. So here we go. So now, new contribution margin, and then I can get the contribution margin ratio. So selling price unchanged. Variable expenses down by 40%. So it's going to be the old 2250 times 0.6. If it's down by 40%, it means that it is 60% of what it was. There we go. Contribution margin, $24. Nice. Up 64, and that is equal to 0.64. I don't think that was the whole number 5 though. We wanted the new break-even point. So I'm going to go here. Get a new break-even point. Sorry, don't mean to make you dizzy. Okay. What's going to happen to fixed expenses? Fixed expenses will increase by 90%. So if it does that, the new form of the new fixed expenses would be the old times 1.9. That's how you increase by 90%. So new fixed expenses 912. New contribution margin. It's not the 15 anymore, but it is. I'll just put it's 24. New break even 38,000. So things are not looking very good. If we automate to break even, we have to go all the way up to 38,000 units, whereas before I could break even at 32. This isn't necessarily better. Number 6. If the new plant is built, how many skateboards to earn the same net operating income? So we go number 6 over here. And now, it was this one over here. So I'm going to copy, go down here, and apply the changes. Well, same formula, fixed cost plus target profit over contribution margin per unit, but things are going to change over here. My fixed costs are no longer what they were. They are now 912,000. And over here, it adds in the 120. So when I do equals, getting big, there we go. Fixed costs, the 912 plus the target profit of 120,000 divided by my contribution margin per unit, which this is from, I took it from upstairs, but here's the new 24. 43,000. So where were we? If indeed we go back here, I was at 40,000 skateboards to make 120,000. I can automate at a nice big cost. That plant is not going to be for free. And I have to sell 43,000 to make the same amount of money. I have to sell more to stay even. Number 6, the new plant is constructed and we manufacture and sell 40,000. What I want now is a contribution format income statement. So we've done one of these before. Let's see. It's going to be sales minus variable expenses going to give me my contribution margin. I'm then going to deduct fixed, and I'm going to get net operating income. So we have to do a little arithmetic here. Okay, where are we? The new plant is constructed, and we do 40,000, just like before. Well, my sales are going to be 40,000 times selling price staying at 37.5. So my sales will be times 1.5 million, and I think we can do a format cells again here. We'll do number, no decimals, 1,000 separator. Variable expenses, 40,000. And I have to get the right variable expenses. Should be this one here, the 1350. And I can copy this formula because it's multiplying those two numbers by each other. Contribution margin, 960. Fixed expenses there, calculated as 912. Net operating income, should be able to do it in your head or on your phone, 48,000. Not so good. Watch. If we go back here, I sell 40,000. I make 120,000. I sell 40,000. I make 48,000. Less than half. Operating leverage, contribution margin, 960. Net income, 48. And it's going to be high. Equal 20. This means if sales go up by 1%, net income is going to go up by 20%. Number C, would we be in favor? So, for number 6C, you could say that there is actually no clear answer, and you can give 1 or 2 points to consider. What's actually happened here is that these variable costs are going up at some rapid rate of knots. And because they're going up, it is really hurting the performance of the company. And so what they are trying to do is they are trying to automate and have lower variable expenses, but the cost of automation is high. Now, we're doing quite well. Let's go to the end, and we want graphs, and the graphs need to look like this: fixed expenses, total expenses, total sales. Well, you can only do these graphs if you have the data. So here we go. Let me zoom a little bit over here. So I want to go from 0 to 60,000 units. Sales, I seem to remember that we're selling at $37.50 each. So total sales can equal this times 37.5. Sell nothing, make nothing. Copy this down. Now I have sales, which is at least one of those lines over there. If I go back here. Fixed expenses. Fixed is fixed. And so we're going to go fixed expenses. Looks like it's 480,000. There we go. Fixed is fixed. We can put little 1,000 separators in here, make it easier on the eye. Number. There we go. Total expenses. Total expenses are the fixed plus the variable, and the variable costs are high, totaling $22.50 per skateboard. So my total expenses are going to be the fixed plus the variable, which is $22.50 per unit times the number of units. And of course, with volume at 0, the variable costs are 0, so this is good to go over there. And I can do a little test and see whether things are looking good. I can go to the 40,000, and I can see that my total expenses are $13.80, and that actually ties in with the $13.80, that and that. So now we're going to go and do a nice graph. I'm actually going to just highlight this, and we should go insert. Make it a line, and it's looking pretty good. What I usually like to do is to move the chart to a new sheet. There we go. And give it a title. Make this nice and easy to see. Be bold. Go to 12. Go to 14. You can see there's a problem over here. I'm going to go to 14. And we need to have a name on this axis here. And indeed, this whole thing is context sensitive. If you want to try view, no, format, nope, design, somewhere over here, we're going to be able to put in the name of the axis. So, sorry about that Facebook there. Here we go. I need those volume numbers over here, and for that I'm going to go select data. I'm going to go here, and I'm going to highlight that and go OK. And now I have the volume numbers where they should be. So title over here, over there, and we should be good. This is a nice, oh, I also ask you for actually explicit labels. Label, the line should be labeled. So which one can we see? This is total sales. We can call it total revenue. And we're going to go insert. And where do I go? And here we go. Insert. Some things only come alive. Text. Text box. Something like this. Total sales. And it shouldn't be total Dales, but how about total sales? And we're going to go over here, and you might just want to format the object. We might want to do a line, solid line. Okay, change this nicely. It's got to get sort of big so it can be seen. 16, still too small. Here we go. You can tidy it up, but after I do that, I also want to insert not a picture, I want to insert that arrow. Where on earth is the arrow? No. Aha, somewhere over here. Arrow, arrow. And so things need to be tidied up. Get a nice bold arrow. This arrow is too flimsy. Format the object. And we need to make the width nice and big over there. And if you can do it this, you can label the other things correctly as well. I'm going to go back to the guidance. Graphs. What I want to do is number 2, the new automated plant. So total sales, I can actually go copy, and I just clicked wrong there. I can go copy, paste. It's the fixed expenses and the total expenses. So I need to refresh my memory over here. Fixed expenses 912. Fixed expenses per unit 13.5. So 912. $13.5 per unit means the total is fixed plus 13.5 times volume. And there we go. And we are just going to check at the 40,000 to see that my expenses are 1452. $1452 is the sum of those. I'm good to go. I think I lost myself here. There we go. This is good. So, number 9, you can do your own graph here. It should just follow the same procedure. Graph this, bring the volume into the graph, and we should be good. Now, I want a graph in number 9 of the loss or the profit. So this shouldn't be too bad. Under the original scenario, my profit is going to be total sales minus total expenses. Total sales. I'm pressing the arrow key, but it's not moving. Total sales minus total expenses. So give me a big loss over there. And so this is my profit here. And this looks good. This is as like the opening blurb. And under the automated situation, it's, again, total sales minus total expenses. And I just want to check at 40,000, I make 48,000. And we can go here. At 40,000, I make 48,000. It's looking quite promising. And now I want a graph. This will be one line. This will be another line. Insert. Something's wrong here. That's better. So we need, this is a loss. So this does go negative, that does go positive, and we need to change these labels. Select data, and right over here I need to use this edit and put the right things. Nice title, format this nice and boldly. You can move this down if you like. You can leave it up there. And I want the text boxes and arrows, and we should be good to go. That is case 11 and case 12. And so from me to you, thank you very much. I look forward to seeing your submissions.